Welcome to ZICA Academy YouTube channel. In this lecture, I want to examine accounting for local government, accrual basis, IPSAS. This is my second video on the topic. In the first video, I will examine the cash basis, IPSAS. But in this second video, I want to examine accrual basis, IPSAS. If you are coming across my lecture for the first time, please like the video and also share it with others. If you are a returning subscriber, I say thank you for being part of this channel. In the first video, I've examined the sources of revenue of the local government. I've examined the expenditure that are usually incurred by the local government. So, we want to look at the accounts required. Accounts required. The following accounts will be required under the accrual basis. Number one, we have the income and expenditure account. Income and expenditure accounts. This account is prepared to ascertain the general revenue balance. General revenue balance. So, the difference between the items of income or expenditure may either be a surplus or a deficit. We have a surplus where the income, that is revenue, is greater than the expenditure. And where the expenditure is greater than the revenue or income, we have the deficit. Please take note of that. So number one is income and expenditure account. It is prepared in line with accrual basis. Accruals we recognize transactions when they occur, not when cash is received or not when payments are made. You recognize transactions when they occur in line with accrual basis. So capital expenditure will not be included in this account. This account will not contain capital expenditure. It will not contain capital expenditure. So items such as depreciation will be charged in these accounts. So we will charge depreciation in these accounts. We recognize transactions in line with accrual basis. Format of income and expenditure accounts. So it is possible the local government may be operating a restaurant or bar. So in that case, we need to prepare bar trading accounts. You know the format for trading accounts. So you start with revenue. Revenue from sales of bar. Now less cost of bar sold or cost of restaurant undertaking. So to get the cost of bar sold, you have the opening inventory. Opening inventory. You add purchases. Purchases. Less closing inventory. When you less that, you get the cost of bar sold. So if you deduct this from bar revenue, you have the bar profit, gross profit, or bar profit. In case you have any other income of the local government, so you add it. You might have income from, you may have rates, other income. You may have rates, then interest or dividend received or investment income. You may add that in case they are given. Earnings and sales. Earnings and sales. Then you may have various other incomes. Let me say other incomes. I've given all these items of income in the first video, accounting for local government under cash basis IPSAS. You know, I categorized the income into three: the statutory source of revenue, the permissive source, and the incidental income. So any other income of the local government, so you aggregate them, you have the total income or total revenue. Total revenue. So for better understanding, watch my earlier video where I give a breakdown, where I gave the breakdown of those income. So watch the video. Then now less expenditure. Less expenditure. Remember, I categorized the expenditure into recurrent expenditure, recurrent expenditure, and the recurrent expenditure was divided into two: the personnel cost, and general overheads. In that video, I gave the breakdown, general overheads. The second categories of expenditure I gave in that video is capital expenditure. Under the cash basis, we set off the capital expenditure from the statement of revenue and expenditure. But the capital expenditure will not need to be deducted here under the accrual basis. We are going to classify the capital expenditure as part of a non-current asset. We classify that as non-current asset. So we will not use it in the statement of income and expenditure. So general overheads, then depreciation will need to be charged as an expenses in the accrual basis. So you have the total. Now deduct the total, you have the general revenue balance for the period, or for the year. If you have the opening balance, general revenue balance brought forward, if you add it, you now have general revenue balance carried forward. This is the format for income and expenditure account. But the revenue, the bar revenue, that is the revenue from restaurant undertaking, may not be given in the question. So where it is not given, you will need to prepare the receivable ledger control accounts to ascertain this. That is your sales ledger control account. Let me have this as working one. Then this one, purchases too, may not be given. So where it is not given, you will need to prepare purchases ledger control account. Let me have that as working number two. So you need to prepare purchases ledger control account to ascertain this. So in that case, you'll be given items such as creditors. You may be given payments to suppliers. That may be given. But for this one, you may be given debtors or receivables. Then you'll be given the receipt from customers. All those information will be given. Working one, sales ledger control accounts or receivable ledger control accounts. So you have the debit side and the credit side. Debit side, credit side. Being a debtor's account, the normal balance in this account will be a debit balance. So you have the debit balance brought down to the debit side. Balance brought down, that is opening balance. Opening balance, that is for the debit balance. The opening balance must be a debit balance. Then you go through the receipts and payment account, that is your cash book. In the cash book, you will see the cash receipt from customers at the debit side. So the double entry principles: for every debit entry, there must be a corresponding credit entry. Since that amount received is found at the debit side of the receipt and payment, you will put it at the credit side. So cash book, that is your receipts from customers. Then the closing balance. In case you have bad debts, where there are bad debts, it will reduce the amount owed to customers. Amount owed by customers will reduce anytime you have bad debts. Anything that will reduce it will be credited. But those things that will increase it, you debit it. Still, bad debts will lead to reduction, so you credit it. Bad debts written off. Then, if you have discount allowed will also reduce the amount owed by the customers, so you credit it. The closing balance will be carried down here, which is closing receivable balance, closing balance in respect of debtors. So, by the time you add the credit side, you have this as the total. You now subtract the opening balance from the total of the credit side. The difference will be your revenue. That is credit revenue, the one on credit. In case you have cash revenue at the debit side of the receipts and payment, you add it to it. So it is the total revenue that will now be recorded in the income and expenditure account. The total revenue that will be here will comprise both cash revenue and credit revenue. The cash revenue, where it is given, it will be found at the debit side of the receipts and payment account. While the credit revenue is the one obtained from the receivable ledger control account, that is balancing figure. So it is the balancing figure that will give you the credit revenue. What you have a balance carried down here will be brought down. Balance brought down. That is the receivable ledger control account. Working number 2. Calculation of purchase. That means you will need to prepare purchases, ledger control accounts, or payable ledger control accounts. So, this is creditors account. The amount owed to suppliers. It is a supplier's account. Being a supplier's account, it must have a credit balance. Creditors account. Creditors is always a credit balance. So the opening balance will be brought down to the credit side. Balance brought down. You don't want to put brought down, you put brought forward. So balance brought down, that is opening balance. Opening balance is always a credit balance. Where it is debit balance, it will be indicated. It will be stated in the question. So then you go through the receipts and payment account. At the credit side, you may have payment to suppliers. Let me put cash book. That is payments to suppliers from the receipts and payment account. Then, if you have discount received will reduce the amount owed to suppliers. So you debit it. This is opposite of the receivable ledger control account I've considered earlier. Discount received. Then the closing balance, which must equally be a credit balance. Closing balance. Then you sum up the debit side. The amount by which debit side exceeds the credit side, that will be recorded as purchases. Purchases. That is balancing figure. Balancing figure. So the closing balance here, balance carried down, will be brought down to the next period. This is the purchase ledger control accounts. The third items that might require adjustment is the expenditure. The adjustments which may affect expenditure are accruals and repayments. Repayments. These are the adjustments that may affect the expenditure, that is expenses. Accrual is the amount due in respect of a service that have been enjoyed but not yet paid for. Where a service has been rendered and that service have not been paid for, that amount is accrued. So it can be called accrued expenses, accrual, underpayment, outstanding, payment in arrears, amount due not yet paid. Any of those languages may be used. No, the accounting principle is periodicity concept and interval concept, meaning that transactions are recognized, are prepared, financial statements rather, are prepared at a regular interval. On the basis of that, if you are preparing the accounting using accrual basis, whether that expenses have been paid or not, in as much it relates to that accounting period, you will need to recognize it. So that is why the adjustment for expenditure, you start with the expenditure as per the receipt and payment. Expenditure as per receipt and payment, the amount you have at the credit side of the receipt and payment. Expenditure as per receipts and payments, or expenditure as per cash book. Receipts and payment is equivalent of cash book. Then, when you have accruals, you may have accrued expenses, you may have opening entry, and you may also have closing entry. So maybe you have 2023 and 2024. The 2024 is closing while 2023 is opening. The one you have in opening relates to previous accounting period, but it was not received as of then. It was not paid as of then, and it was included in the amount paid in the current period. Since it does not relate to current period, you will need to subtract the opening accruals. But the closing accruals is the one that relates to current period but have not yet been paid. It is the closing that will be added. You add the closing accrual less opening accruals. Prepayment is opposite of it. Another word for prepayment is payment in advance. It is the closing that will be subtracted while the opening will be added. So we add closing accruals, add opening prepayment, less opening accruals, less closing prepayment. The balance is the amount that will appear in income and expenditure account. Income and expenditure accounts. The second account required is statement of assets and liabilities. That is statement of financial position. So you start with assets. Assets, which may include the advances, or you may start with cash, liquid assets, cash or bank. Just like the format I gave you under the cash basis IPSAS. Then advances or debtors or receivables. Then investments, if any. Investments, then non-current assets. Non-current assets, if any. Depreciation will have been deducted. Then you get the total assets. From the total asset less current liabilities. Then you get the net total assets or net assets. Then you now have financed by. Then general revenue balance, if any, general revenue balance. Then loans. The loans could be external, it could be internal. Then you have this at the total. These are the format for the two major financial statements I want to examine under the accrual basis IPSAS. The preparation of statement of cash flows, that will be covered in a separate video. Now I want to take a question as work example. Keep watching. Example, the Lagom Island Local Government Council maintains a staff restaurant at Ibara Hospital. The following information is available for the year ended 31st December 2008. Stocks, provisions, 3,345. Cleaning material stocks, 985. Creditors, which comprises provisions, 4,086. Creditors for gas, 2,323. Creditors for cleaning materials, 880. Creditors for insurance, 968. Creditors for printing, 98. So these are expenses. Creditors for expenses mean accrued expenses. I want you to take note of that. Anytime you have creditors for expenses, they mean accrued expenses. Creditors for cleaning materials, that mean accrued. Accrued insurance, accrued printing. Take note of that because of the word creditors. Miscellaneous debtors, 146. Cash float, 30. Receipts and payment for the period were as follows. We have receipts, which comprises sales, 239,410. Miscellaneous receipt, 1,932. Payments, which include provisions, 171,356. Salaries, 7,654. Then wages, which comprises kitchen, 55,865. Cashier, 5,065. Dining room, we have 11,384. Insurance, 13,985. Electricity, 2,388. Gas, 26,946. Laundry, 3,441. Cleaning materials, 1,064. Printing and stationery, 460. Miscellaneous expenses, 566. The following amounts due to creditors as at 31st December 2008 are yet to be accounted for. Provisions, 3,978. Gas, 4,340. Electricity, 780. Printing, 28. Insurance, 1,578. The following information are also relevant. A. The laundry services are provided by the hospital and recharged through the year. The charge for the final quarter of 2008 is still outstanding and is expected as at the same level as for the remainder of the year. B. As at 31st December 2008, stock of provisions amounted to 3,498, while that of cleaning materials was 324. Stocks of provision of 425 is to be written off as unsaleable. C. Miscellaneous debtors amounted to 248 as at 31st December 2008. It is anticipated that a debt of 27 naira is uncollectible. D. The cost of the maintenance of the cooling system in the hospital is in charge at the year end. On the basis of law area, the following additional information are available. 1. Maintenance cost of cooling system, 87,555. 2. Hospital floor area, 17,511 square meters. 3. Restaurant floor area, 400 square meters. E. The hospital charges the restaurant administration fee of 2,860. F. As of December 31, 2008, the interest float amounted to 18 naira. G. The restaurant is not expected to break even. However, the local government council lays down clear guidelines as follows. 1. Price should be set to cover the cost of provisions consumed plus 50% thereof. 2. The deficit for the year must not exceed 50,000 naira. H. The restaurant is in respect of the staff restaurant building. The insurance is in respect of the staff restaurant building required. Prepare income and expenditure accounts for the year ended 31st December 2008. This is the requirement. Now let's have the solution to the question. The name of the local government is Lagom Island Local Government Council. You are to prepare the income and expenditure accounts. Income and expenditure accounts. Income and expenditure accounts for the year ended December 31st, 2008. So you start with the items of income. Since the local government is operating a restaurant, that means you will need to prepare the restaurant trading accounts. So, to prepare the trading accounts, let's go back to the question. We have sales. The proceeds from restaurant sales is 239,410. We have sales. $239,410. Now less cost of bar sold or cost of items sold. Items sold in the restaurant. So back to the question. We have stocks. This is opening entry. It is in the opening entry that you are going to have the opening balances. So this is the opening stocks, 3,345. Opening stocks, 3,345. These are the closing balances. Then look at the stocks. As at 31st December, note B, 2009, stocks of provisions amounted to 3,498. This is the closing stocks. So we have chosen our opening stocks, we have taken that. Then you add purchases. You add purchases. How much is our purchase? Working one. We didn't prepare sales ledger control account because the sales have been given. Apart from that sales, we did not have any receipts from customers. So if you look at the receipts and payment, the receipt side, you only have sales and miscellaneous receipts. Apart from these sales, you did not have receipts from customers for provisions. No, the trading account we are preparing is for provisions. But go to the payments, you have provisions. These are payments made for provisions. That means you will need to prepare the purchase ledger control account. Working one. purchases, ledger, control accounts. So while we're preparing this, we want to ascertain the purchase for the period. The purpose of preparing this is to ascertain the purchase for the period. You have creditors. This is creditors for provisions. You know, the trading account we are preparing is for provisions. So that is why we are taking this as the opening balance. Being the creditors balance, or being the creditors account, I've told you that the normal balance in that account must be a credit balance. So we are going to transfer this to the credit side of the purchase ledger control account, 4,086. So we have balance brought down. That is the opening balance, 4,086. Then back to the receipts and payment. You have provisions, 171,356. This is under payment. If this account were presented in T format, this would have recorded, the payment would have been at the credit side of the receipts and payments. So 171,356. So being a credit item in the receipt and payment, so you are going to put it at the debit side. Let me put back 171,356. How much is the closing balance? Closing balance. The following amounts due to creditors as at December 31st, 2008 are yet to be accounted for. We have provisions. This is the creditor at the end of the year, 3,978. You have that as balance carried down, 3,978. What is the total of the debit side? 171,356 plus 3,978. The debit side is totaled 175,334. You subtract the amount you have at the credit side of 4,086. Then you have 171,248. This balance is the purchase. That is the purchases you are looking for. This balancing figure. $175,334. The closing balance here will be brought down to the next period. Balance brought down 3,978. So this is the purchase we need. That purchase will be transferred to the trading account, 171,248. Let me say cost of provision sold. Cost of provision sold. Since this trading account is the provision trading account. So opening stock plus purchase plus 3345. Then we have 174,593. Less closing stocks. Now, back to the note. Note B. As at 31st December 2008, stocks of provisions amounted to 3,498. This is the closing stock. While that of cleaning materials was 324. Stocks of provision of 425 is to be written off as unsaleable. We have to subtract the one that is to be written off. So we have to subtract it from the closing stocks. So we have 3,498 minus the one to be written off, which is 425. 3,498 minus 425. Then you'll be left with 3,073. 3,073. So if you subtract that from cost of goods available for sales, you have cost of provision sold. Cost of provision sold 174,593. Then cost of provision sold, that is 171,520. If you subtract this from sales of 239,410, then you have the gross profit of 67,890. That is the gross profit. Then, back to the receipts and payment account. We want to check if there are other items of income or receipts. The sales have been considered. Then we are left with miscellaneous receipts. And if you go to the opening entries, you have miscellaneous debtors. Now let's open miscellaneous income account, work number 2. Miscellaneous income account. In the opening entry, you have miscellaneous debtors, 146. A debtors must have a debit balance. So that is why we'll be bringing down that balance to the debit side. Balance brought down, 146. Then, in our sales and payment accounts, we have 1,932 under the receipt. That means the receipt side is the debit side. This item is at the debit side of the receipts and payment. So if you want to transfer it to miscellaneous income account, it will go to the credit side. So 1,932. So we have bank, or you can just put receipts and payment, 1,932. The closing balance. Back to the note. Miscellaneous debtors amounted to 248 as at December 31st, 2008. This is the closing balance. That is the balance as at December 2008. 248. If you add 248 to 1,932, then you have 2,180. You subtract the opening balance minus 146, then you'll be left with 2,034. 2,034, that is the amount that will be transferred to income and expenditure account. The total is 2,180. The closing balance here will be brought down to the next period. Balance brought down, which is 248. So this amount will be transferred to income and expenditure account. So we have miscellaneous income of 2,034. That is work number 2. 2,034. So if you add it to 67,890, you have 69,924. That is the total revenue or total income. Expenditure. What are the items of expenditure given in the question? Back to the receipts and payment. The provisions have been considered, and these have been used in calculating the purchase figure. Then we have salaries. We did not have any outstanding salaries. We didn't have any balance in the opening entries. So salaries amounted to 7,654. Salaries, 7,654. Then after salaries, we have wages, which comprises kitchen, 55,665, cashier, 5,065, dining room, 11,384. We are going to add the 3 wages together. So we have wages, 55,865 plus 5,065 plus 11,384. The total wages for the period will be 55,865 plus 5,065 plus 11,384, and that is totaled 72,314. Insurance. Now, back to the receipts and payments. The receipts and payments is 13,985. 13,985. Then back to the note. You were given creditors for insurance, 968. This is accruals. Remember, I've told you creditors in relation to expenses mean accrual. This is accrued insurance. This is the one in the opening entry. I've told you the one in opening entry, you have to subtract it. Subtract the accruals in the opening entry, while the accruals in the closing entry will be added. Let's check our closing entry. Insurance, creditors for insurance. The closing entry is 1578. So we add 1,578. The opening insurance is 968. We subtract that. Minus 968. So we have 13,985 plus 1578 minus 968. So we have 14,595. Back to the receipts and payments. The next item is electricity, and that amounted to 2,388. Electricity. 2,388. Let's check the receipts and payment. The opening entry. Do you have any electricity there? There is no electricity there. Check the closing entry. We have creditors for electricity. This is accrued, 780. Remember, we used to add the closing accruals. So plus 780. We didn't have an opening. If you have anyone in opening, that will have been subtracted. 2388 plus 780. That gives us 3168. 3168. The next item is gas. 26,948. Expenses for gas. Expenses incurred on gas, 26,946. 26,946. Do you have anything in relation to that? In our opening entry, gas, yes. Creditors for gas. Remember, this is accruals as well. Since it is creditors for gas, 2323. This will be subtracted. Check the closing entry. If you have accruals in the closing entry, that will be added. Gas, 4340. So this will be added. Plus 4340. Minus opening. How much is opening? 2323. 2323. We have 26,946 plus 4340 minus 2323. 2323. That gives us 28,963. Laundry, 3,441. Let's go through the note. Note A. The laundry services are provided by the hospital and recharged through the year. The charge for the final quarter of 2008 is still outstanding and is expected as at the same level as for the remainder of the year. That is to show that if the amount charged for the final quarter is outstanding, no, a quarter is 3 months. We have 4 quarters in a year. One quarter is March, another one is June ending, another one is September, another one is December, making 4 quarters in a year. So the last 3 months now, so the amount charged for the last 3 months is still outstanding. That means the laundering of 3,441 does not include the one for the last 3 months. That is to show that this is for the first 3 quarters of the year 2008. First 3 quarters is 3,441. But the last quarter of 2008 is outstanding. So you want to calculate for the whole year now. So we have laundry 3,441 is for 3 quarters. Since this is for 3 quarters, so you divide it by 3 in order to get the amount due per quarter. For 1 quarter, if you divide it by 3, it will give you for 1 quarter. And for the 4 quarters of the year, you have times 4. So that will give us 3,441 divided by 3 times 4. That gives us 4,588. Working number 3. You have the cleaning materials. Cleaning materials. You are given cleaning material stocks. That is 985. That is opening stocks. Opening stocks. 985. Then purchases of cleaning materials. Purchases. So now let's go to the receipts and payments. You have cleaning materials purchase is 1,064. Then 1,064. You have any accrual at the end of the period in respect of cleaning materials? We didn't have anything as such. So 1,064. 1,064. We didn't have closing accruals. But we have creditors for cleaning materials. This is the opening accruals. We used to subtract the opening minus 880. That is the opening accruals. So 1,064 minus 880. That gives us 184. 184. That is the purchase of cleaning materials. 184 plus 985. Then you have 1,169. From this, you less the closing stock. Less closing stock. Back to the note. So we have, as at December 2008, stocks of provisions amounted to 349. This is for provision. While that of cleaning materials was 324. That is the stocks of cleaning material, 324. Closing stocks, 324. If you subtract the 324, then you have 845. 845. That is the amount that we appear in the income and expenditure. Income and expenditure accounts. That would be 845. So, cleaning materials. That is working number 3, which amounted to 845. Back to the question. We have printing and stationery, 460. Printing and stationery, 460. Do we have anything? Yes. 460 is the amount paid. Amount paid is 460. Then you have printing. 28. That is creditors for printing. That is accruals at the end of the period. So you add the closing accruals plus 28. Do you have anything as such in the opening? Printing and stationery. Yes, we have 98. Creditors for printing 98. We subtract the opening accruals minus 98. 460 plus 28 minus 98. So you'll be left with 390. Then we have miscellaneous expenses 566. Miscellaneous. Miscellaneous expenses that amounted to 566. Do you have anything that affect miscellaneous in the note? So we didn't have anything as such here. So there is nothing. Okay. This is miscellaneous debtors, and that have been adjusted to get miscellaneous income here. So miscellaneous. This is debtors have been adjusted in the miscellaneous receipt. So there is nothing that affect that. Miscellaneous expenses. Miscellaneous expenses that amounted to 566. The laundry services are provided by the hospital and recharged through the year. The charge for the final quarters of, okay, these have been considered. No B. As at 31st December 2008, stocks of provisions amounted to 3498, while that of cleaning material was 324. Stocks of provisions of 425 is to be written off as unsaleable. So since it is to be written off, that is bad debt. 425. So it will be written off. Stocks written off. Stocks written off. And that amounted to 425. Then see, miscellaneous debtors amounted to 248 as at 31st December 2008. It is anticipated that a debt of 227 is uncollectible. Uncollectible debt. Uncollectible debt. And that amounted to 27 naira. Note D, the cost of the maintenance of the cooling system in the hospital is recharged at the year end. On the basis of floor area, the following additional information are available. The maintenance cost of cooling system, that is 87,555. That is for the cooling system. Remember? So we're told hospital floor area is 17,511 square meters. And the restaurant floor area, because our focus is for restaurants, so this is the one we are concerned with. So, and we're told maintenance, the cost of the maintenance of the cooling system in the hospital is recharged at the year on the basis of floor area. So the one, since our calculation is majorly for restaurants, so you have 400 over 17,511. So cost of maintenance, they have maintenance. 400. The floor area for restaurant is 400. For the whole hospital, the floor area is 17,511 over 17,511 times how much is the cost of maintaining the whole thing. I have 87,555 times 87,000. 87,000 555. So that will give us 87,555 times 400 divided by 17,511. That gives us 2,000. 2,000. Note E. The hospital charges restaurant administration fee of 2,860. Have administration fee. Administration fee. The one borne by the restaurant, 2,860. 2,860. Then note F. As at December 31st, 2008, the interest float amounted to 18. That is a float. It's not an expense. A float, just like cash. So it will be used in the statement of financial position. Note G. The restaurant is not expected to break even. You were told they are not expected to break even. However, the local government council lays down clear guidelines as follows. Price will be set to cover the cost of provision consumed plus 50% thereof. So this is the basis of setting the price. And you have been given the sales revenue. So that means this information is not useful here. The deficit for the year must not exceed 50,000. That is the condition. The deficit must not exceed 50,000. The insurance is in respect of the staff restaurant building. So the insurance relates to restaurant building. It relates to restaurant. We want to prepare the income and expenditure account. So we sum up all our expenditure. Expenditure 7654 plus 72,314 plus 14,595 plus 3,168 plus 28,963 plus 4,588 plus 845 plus 390 plus 566 plus 425 plus 27 plus 2,000 plus 2,860. The expenditure is total 138,395. How much is the total income? The total income is 69,924 minus 69,924. So we have 68,471. So we have deficit. This deficit exceeds the minimum. This is a deficit. It exceeded the 50,000 required. So I will stop this lecture here. Please make sure you drop the love emoji. Also share the video with others. Thanks for watching ZICA.